Hey, what's up, guys? Good morning. Happy Wednesday. We'll kick off a little bit of prep here for the April 6th session. But, guys, I'm in a bit of a scramble here this morning. Got to get a few things done before I jump into the options room for the open. So I'm going to keep this short and sweet, but quick look here at the futures. And mind you, some decent selling pressure yesterday. But this morning, the S&Ps are down 1%. I think it sounds a little bit worse than it is. The QQQ is down 1.5%, and we can look at the small caps as well. Small caps down about 1%. So some pretty good selling pressure yesterday. I think yesterday the S&P was down, 1 and change. The QQQ yesterday was down, 2%. I think the semiconductors were down 4%. Looks like a little bit of that selling pressure is carrying over into this morning. But to kind of put it in its proper context, guys, we get oversold, so the shorts get trapped. They squeeze the shorts, and in the process of squeezing the shorts here, we ran a little bit too high and a little bit too quick. So things certainly got pretty extended. The S&P 500 was up here at 2 ATR. The QQQ was up there, pushing through 2 ATR. And then you had names like Tesla hitting 3 ATR. Same thing with Amazon. Same thing with Apple. I think Google as well. So the point being is, short squeeze aside, market environment aside, anytime we're trading 2 to 3 average true range moves above the 21 EMA, it sets us up, guys, for that pullback to the 21. So for some proper context here, yesterday was a little bit nasty. This morning looks a little bit nasty. That's just kind of your normal reversion to the mean. Once you're up here at 2 ATR, you've got to know in the back of your head at some point, we're going to come back down to earth to the 21 EMA. So I think, at least as of right now, that's what you want to anchor to. Do we find support at the 21? And here's the nice thing. For the S&Ps, the daily 21 EMA is basically right on top of the weekly 21. Now, in terms of my game plan here with the overall market, not looking to do anything just yet. Now, typically, I might want to buy the dip into the 21, but there's no buy signals, there's no stacked DMAs, so it's not really a bullish structure. In terms of shorting the market here, I'm not going to be the first guy to short it at what could be pretty big support. Now, if we flush this week, we're back under the 21 EMA, we got some sell signals, then I'll get back to shorting the bounces. But for now, at least on my end, not looking for any longs or any shorts here. On the indexes, on the big tech names, look at the semis here. And based on my criteria, under the weekly 21 with the sell signals, semis look like a short. From the same perspective, the financials with negatively stacked DMAs and sell signals under the weekly 21, that kind of sets up as a short. There's a lot of this right now. The industrial sector, XLI, got some sell signals. There's the transports. Transport is just getting whacked here. Back under the 21, and it got some sell signals. So my focus right now is kind of take it day by day in terms of the overall market. So maybe we don't hold support here. Maybe we flush. Maybe I'm looking to short. But in the meantime, guys, I think we just want to follow the trends and follow the good structure. And regardless of the sloppiness in the indexes, the sloppiness in the semiconductors, there's still some really good looking trend and structure out there. So real quick, I'm going to show you a few spots. Not to keep beating the same horse here, but energy looks awesome. Good uptrend, get the brand new daily squeeze. Not brand new, but got the daily squeeze. We're at the 21 EMA. We got the buy signals. So I think anything in energy still looks pretty good here. XLE, EOG, DVN, Chevron looks really good. And I think Exxon looks really good. Biggest piece of advice, if you look at the weekly chart here of energy, as much as I like the trend and as much as I like that daily squeeze, we are a little bit potentially extended here on the weekly chart, up here at 2 ATR. So I think the level to focus on is going to be that weekly 8 EMA. That's kind of like the momentum moving average. So you get the flush, you find support, push continues, you pull back to the 8, find support, the push continues, so on and so on. So we got a little bit of energy yesterday in the mastery. We got some call debit spreads on XLE, but our game plan here in terms of risk management, if we get a close under the weekly AEMA, so call it $73, we're probably going to exit the trade, because at that point, you take out the momentum moving average, probably sets you up for a pullback into the weekly 21. At which point we want to buy a little bit down there. But I think energy for now, good trend, good structure, good momentum. Next up, guys, is healthcare, XLV. Right? So the major differences between healthcare and the financials or the semiconductors or your big tech stocks, we're above the weekly 21. Really, really important. We've got positively stacked EMAs on the weekly and the daily, and you got a couple green 10x bars. So I'd like to buy a dip here on the healthcare sector. So there's UNH. Got your green lights, you got your squeeze, got some buy signals. There's ABBV. Really nice uptrend. So got some momentum, got some structure. And then you got Johnson & Johnson. Pretty solid stuff. So the semiconductors, which I love to trade to the upside when they have good structure, they don't have it right now. For under the weekly 21, and we got the sell signal, my primary focus here is, okay, wait for a bounce. And if that bounce doesn't take it back above the weekly 21, I'm going to try to short it. So back over here, we're under the weekly 21. We get a bounce. Bounce doesn't take you back above key support. You fade that right back down. So big differences between the semis and healthcare. Another group I like here, guys, is XLP, which is the consumer staples. A lot of the same structure. Above the 21. Everything checks out over here. In a few pretty good looking setups here within XLP. So the one that we're trading right now is MO, which is Altria. And this is pretty clean. Got the green lights, got a nice daily squeeze. And let me see, I think I got, yeah, there we go. And in addition to the daily squeeze, we got a 3-day, 4-hour, and a 2-hour. So we're looking for a push here on Altria back into about 54, 54 and a half. So good structure within a good looking sector. Another XLP name here is Costco, this is definitely the strongest in the group. So I wouldn't chase it up here necessarily, but if Costco were to pull back to about 560, you're buying that pullback into good structure, right? Good trend, good momentum, buy signals, and you're part of a good looking sector. So you got some energy, some healthcare, some XLP, and then one more for you guys here is the material sector, XLB. Above the 21, got some stacked EMAs. So if you start looking at some material stocks, there's a few. There's names like Nucor, NUE. Would love to see this pull back a little bit. Print a brand new daily squeeze. That'd be really solid. Basically, like just like right back here. So Nucor looks really, really good. Let me think here. Materials. I think you got FCX in that group. Freeport. Pulls back and finds support right where it should yesterday. I think Mosaic might be in the same space here. Regardless, MOS Mosaic. Really good looking chart. And then one more here is agriculture, DBA. You've got some May expiration calls. Do I prefer to trade Google? Yeah, probably. I kind of grew up trading stocks like Google, the AMDs, NVIDIAs, Apples, Teslas. None of them look like this right now. So the funny thing is, if this was Google, it's probably all I would talk about, during these morning sessions. It's all I would talk about during my options room sessions. It's all I'd be focusing on. Because it's agriculture, I'm really guilty of seeing this day after day after day after day in my scan results, but I ignore it or just kind of, breeze right past it because it's not Facebook, Netflix, Nvidia, not a big, sexy, big tech stock. That's a really good trend and a really good structure. And the buy signal is basically trying to communicate we should be paying attention here. So that's what we got for open positions right now. We got some DBA calls. We've got some call debit spreads here on XLE. We got a few calls, a few different trades here on Altria. And then we got some May expiration put credit spreads on GLD. Now I'll show you the gold futures here. And looking at the gold futures, we got the daily squeeze, we got the buy signals. I think a bit more meaningful. And mind you, we're looking for a push here into, I think you want to look for May, June, July. So I wouldn't really jump into gold here. Looking for anything of substance in like a 2-week window. But in terms of a trade out into, May, June this summer, very much like back here in 2018, 2019, find support above the monthly 21, go into a monthly squeeze, and then as that histogram turns positive right there, triggers a pretty massive move. So in terms of the current positioning, we're above the 21. We're printing a squeeze, but as of this week, got to zoom in to see it here, but slowly but surely, a little bit of positive action hitting that monthly histogram. So this does not mean in any way, shape, or form gold is going to explode, today, this week, maybe not even this month. But if you're pursuing a bigger picture move back into about 2050, 2075 in the next 2, 3, 4 months here, you really want to keep an eye on that monthly squeeze. And I think if anything, you want to try to get positioned now before it starts going crazy here. Not to say it has to. It's just the easier entry if you can sit through some of that back and forth. Again, not to say the monthly squeeze has to fire, but when they do, it's kind of off to the races, and you might struggle to get a good entry. So we got some GLD, we got some energy, some DBA, and some Altria. And for those of you in the options room, today we're going to focus on 2 different things. We'll keep a close eye here on LMT. Beautiful daily squeeze. We've also got a nice daily squeeze here in CCJ, which I really like. Going to keep an eye on CCJ, going to keep an eye on LMT. And then one day, guys, one day, we'll get a chance here to buy the dip on UNG, natural gas. One day. But that's what I got, guys. So the theme here for me, at least, is to an extent, I really don't care too much what the S&Ps or the QQQ do right now. I got to focus on a particular setup. I'm looking for certain trend properties, etc. There's a lot of that in the market. It's just in names like healthcare, agriculture. Again, not the most exciting stocks, but compare the structure of AMD with negatively stacked EMAs, bearish momentum, and sell signals. Compare that structure with agriculture. If we're looking to get bullish, I think there's a lot more edge in something like agriculture. And again, it's not about AMD versus agriculture. It's trend and structure versus trend and structure. We got buy signals. We should probably think about getting long. If we have sell signals, we should definitely not think about getting long and maybe think about getting short. But that's what I got, guys. I got to be in the options room here in a bit, but I do got a few minutes here to jump into any questions. Hey, good morning, Mr. Walker. Good morning, Terry. Yeah, Matt, I think Oxy looks great. So here's the thing with the whole, energy move. If Oxy just kind of falls apart and rolls over, what that most likely means is XLE fell apart and rolled over. And as a result, Chevron and ExxonMobil and Fang and EOG and Devon, they're all probably going to roll over. Same thing to the upside. XLE makes the push back into about $80. you're probably going to be in great shape being long any of them. So in terms of structure, Oxy's got to be a great candidate. Daily squeeze at the 21. You've had buy signals since mid-February, and you got the green lights. All I'm trying to say is if it doesn't work, meaning it rolls over, it's very likely it's got nothing to do with, Oxy. It's going to have everything to do with the overall group. But I think it's a great structure. I do like it. Hey, good morning, Fly Guy. Ooh, good question here. On the Amazon stock split, could you give advice on share buying timing? Okay, good question. Good question. So pull up the Amazon chart here. Now, kind of like that whole, energy, Chevron, Oxy discussion, Amazon's very likely going to move with the S&Ps and with the QQQ. So this next Fly Guy, what is it, June, July? I think they're doing the stock split. Regardless of when it is, though, of course you want to focus on Amazon itself. A huge part of that timing component is really going to be based on where the QQQ goes from here. So that's where I think you want to be a little bit patient. To your benefit, Fly Guy, QQQ is back under the weekly 21. So say we fail to find support here, and into the end of April, we come back down here to test those lows. What that very likely means is Amazon here probably going to boogie on down towards 3,000, maybe a little bit lower. So why does Amazon flush over here? It's got nothing to do with Amazon. The S&Ps and the QQQ go down, down goes the big Zond, and the same thing to the upside. So this massive, rip here, it's really got nothing to do with the stock split. Again, in my opinion, and nothing to do with Amazon. That ripped because the market ripped. So yeah, we want to focus on Amazon, and we could pick a few levels here. What I would really have you focus on the most would be your QQQ. This holds support back above the weekly 21. Next week, a few weeks from now, we got some stacked DMAs. This starts to improve dramatically. There's a pretty good chance Amazon might get moving. But the next few weeks here, if this all breaks down, you're going to get a better entry on Amazon. So that's my biggest piece of advice. As goes the QQQ, is going to go good old Amazon there. Okay, purchase date is May 27th. That could work out. That could work out really well. So that's what I'd anchor to. Really focus on your QQQ. If everything's looking peachy, we're back above support, you got bullish momentum coming in, might be time to pick up some Amazon. But if we fail to hold here, next few weeks, between now and May, there might be a nice flush. You might get a really nice entry on some Amazon shares. Awesome question. Awesome question. Oh, another good question here. Another good question. So, yes, I would have to agree. ABBV is certainly extended here. Not only on the daily chart as we're trading up here at 2ATR. So with that being said, I really wouldn't think about pricing out a trade unless we got back to the daily 21 EMA. Now, even when we get there, in terms of probably some more important context, we're pretty extended here on the weekly chart. So the easiest part of this trend starts back here. Now, very much like energy, I think this is a great question. I think we can look at ABBV and a few of these healthcare names, very much like the energy sector. I'd like to buy it on a dip, but you'll notice here that AEMA continues to hold the support. So maybe it pulls back to about 158-ish. My suggestion at that point, keep your exit on a close under that weekly AEMA. Because if we break through there, we could be heading all the way back down to the weekly 21. Not going to be the most comfortable thing. So awesome question. Because we're a bit extended on the daily chart, I could only buy it at the 21 EMA, but even then, going to keep a pretty tight leash on its neck. And the same thing would go for Eli Lilly as well. Awesome question. Hey, good morning, Michael. MATX for a bounce. Let's take a look. Well, I wouldn't short it here. So that's kind of the first good sign. Kind of like what we saw in the overall market a few weeks ago. That moment in time when everything feels, as bearish as possible, is typically when you're setting up for a bounce. So we're a little bit extended. We're down here at -2 to 3 ATR. I think in terms of trying to get a bounce, though, we want to try to anchor to some level of support. So I'm not too sure what the support level would be here. But here's a more important piece of advice. Bearish momentum is what got it down here. What's going to lead to that bounce is basically the disappearance of that bearish momentum. So either on the Squeeze Pro or the OG Squeeze, which is available on a lot of platforms, you're going to want to start to see that rotation of momentum across a few different time frames. So at first it has to start with your 15-minute, and we're not there quite yet. Histogram is still negative. So we're looking for exhaustion of all this nasty momentum that dragged us lower. So ideally, 15-minute histogram starts turning positive, right? Get some light blue bars. That kind of wakes up the 30-minute chart, starts to shift momentum there. Then you're looking forward on an hourly, so on and so on. But in terms of catching a bounce, typically you at least want to wait until the 15-minute chart can turn positive. Generally speaking, if it can't turn positive, could continue to grind lower. And there's a few tools we have for this, which maybe you got access to a few of them. The Ready Aim Fire tool is awesome for that. Sam's got a really good indicator he came out with recently. But in terms of just kind of keeping it simple, you're looking for an awakening of some bullish momentum on your lower time frames. Best piece of advice there. And guys, I got to jump here in just a second. So this will be the last one. Good morning, Anthony. How do I differentiate my option account long-term portfolio? Comes to entries and strategies. Good question. So to be honest with you, I don't have a long-term account, which is I'm kind of approaching, fatherhood and things of that nature. Definitely want to get into that kind of, style of putting my money to work. I think my simplest piece of advice would be to separate the two. Right? If you're not already, I think you really want to separate the two. So have your options trading account, your shorter term account, and then have your, your longer term account. In terms of how I would differentiate, this is really a good question. Here's how I would potentially differentiate. If we're just going to be focusing on charts and patterns and structure, focus on bigger time frames. Right? For example, we can look at a 30-minute squeeze on gold. That's great for a weekly options trade. Right? Buy some calls, flip them out, and move on. Looking at a monthly squeeze on GLD, that's a great way to latch on to something at $1.20 and ride that wave for a good 2 years, for a hell of a return. So again, not something I'm currently doing, and I'm sure when I do, there's going to be a focus on other things as far as, dividends and income producing. But maybe something to consider is, what are you doing in your options account, to catch solid moves, and maybe taking consideration to doing the same thing in your longer term account, just on bigger time frames. Hopefully that makes sense. But all right, guys, for those of you in the options room, I'll see you in a few minutes. I'm going to go crank up the coffee. But for the rest of you guys, always a pleasure doing battle with you here before the open. Hope you found a little bit of this helpful, and I wish y'all all the best of luck here today. So trade safe, trade smart. I'll talk to you guys soon.